Now we focus on the rupee's new record low past 84 against the US dollar. Foreign outflows from stocks and bonds and a less hawkish central bank piled pressure on the currency. The Indian rupee fell past 84 to a dollar for the first time ever on Friday. The currency dropped as much as 0.1% to a new record low of 84.0975 on Friday. Offshore investors have sold $5.7 billion worth of Indian stocks in the month. While bonds have seen $125 million of outflows, traders were keeping a careful eye on the 84 level. The reason? Experts were anticipating a stronger intervention from the central bank once it was broken. Kunal Sudhani, vice president at Shinhan Banks India, said there were interventions at 83.98 and 83.99 levels, but the outflows from assets have been very strong, especially from equities. Sudhani added after this 84 break, it will be important to watch how Reserve Bank of India's intervention takes place. The rupee has been steadily weakening this year to set new record lows repeatedly. The currency, though, has remained in a narrow range as the central bank focused on the rupee's stability. On Wednesday, the RBI pivoted from a hawkish withdrawal of accommodation to a neutral attitude. This led to speculation that the RBI is moving closer to rate cuts and weighed on the rupee further. India's forex reserves fell slightly in the latest week. This comes after the reserves hit a new record high, reaching the $700 billion mark for the first time ever in this week prior. However, the country's import cover still remains above $700 billion. This indicates the large firepower that RBI has to keep the currency stable. And for more on this, we are now being joined by Amit Pawari, founder and MD of CR Forex. Thank you so much for joining us this morning.
Good morning.
Right. Now, according to you, what could be the possible reason behind the rupee fall to a record low past 84 per dollar?
Primarily, we can say there are three reasons why rupee broke the key level of 84. The first reason is FII has been selling in Indian equity and the stock market. They have withdrawn money close to $6.5 billion in the month of October. Second reason can be the crude oil price, which was stable till the month of September, now has moved up by 10%, which is adding pressure to India's trade deficit. Third reason is after few good data from the US economy side, dollar index, which moved from 107 level to 100 level in the month of September, bounced back again towards 103 kind of a level, which added pressure on all emerging market currencies.
Right. And the RBI has intervened to limit the rupee's fall and to keep it stable. I would like you to further help us understand this.
There are two data points which suggest that RBI has been actively managing the currency well. On 19 October 2022, rupee broke a key level of 83. So from 83 to 84, it took almost 2 years for rupee to get weaker. As far as forward premiums are concerned, 1 year forward premium is close to 1.77 rupees. Basically, it means that forward premiums are currently trading at close to 2% per annum. If we have to compound that, rupee has not got weaker more than the premium. In coming days, we are expecting a rupee to face a tough resistance near 84.25 to 84.30 kind of a level. There are two important reasons for the same. First reason is RBI will continue to intervene heavily because of higher reserves. Second, India has a trade deficit with China close to $85 billion. Currently, CNY INR is trading close to 11.90. If CNY INR continues to move higher towards 12 or 12.20, it is going to further add pressure on India's trade deficit. So probably RBI might not like CNY INR to move close to 12 or 12 and a half kind of a level. Second reason, why we expect rupee to come down is the major trend in dollar index. One of the biggest issue what US economy is currently facing is rising debt level, and whichever party comes into or whichever party wins the election, the broader strategy will be adding on debt. If that happens, dollar index, which is currently trading near its 200-day EMA, close to 103.30 level, it might face a resistance near that level, and it can come down further towards 101.50 kind of level. And once it breaks 101.50 and 100 kind of level, 2025 will be the year where we can see dollar index trading below 100 level. If that happens, that is positive for all emerging market currencies and rupee also.
And that being said, according to you, what should be the ideal strategy for traders, exporters, and importers?
Yeah, so basically, exporters has to understand that the forward premium for 1 year forward premium is close to 2%. And historically, from last 2 years, we have seen that RBI has been able to manage the currency in a decent manner. So for exporters, we are suggesting they should continue to book the long-term forward. They should be maintaining a hedge ratio close to 60-65% of the entire year turnover. And for importers, we are suggesting that they should not go and hedge the long-term imports. Basically, whenever the dip comes near 83.80 or 83.90 kind of a level, they can cover their near-term imports of 15 to 20 days.
Right. That was Amit Pabri, founder and MD of CR Forex. Thank you so much for joining us on the show and giving your insights.
Pleasure is mine. Thank you.